37% in a single day. No news, no announcement, nothing. That isn't a crash, that is an execution. Silver was trading at $121 Friday morning. Then it crashed to $75. $46 erased in just 6 hours. Gold dropped from $5,600 to $4,700. $900 gone. And here's the thing that should immediately tell you something is wrong. No war started today. No pandemic emerged. No bank collapsed. There was nothing on the wires. Nothing breaking on the news. Complete silence from every major outlet. We just witnessed the biggest single-day crash in precious metals in years, and nobody seems to be able to tell you why it happened. But I can, and when I show you what I found, you will understand why this keeps happening, why it happened in 1980, why it happened in 2011, and why it is going to happen again, 3 times in 50 years. Same pattern, same tool, same destruction. This is not some conspiracy theory. This is documented history, and you're about to see it clearly. If you're new here, I expose what is really happening in markets while everyone else is distracted by the headlines. Subscribe right now because this is the kind of analysis you will not find anywhere else. And if you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see it. Now let me take you through exactly what happened on Friday, January 30th, and why it matters far more than you realize. Friday morning. Last trading day of January, last trading day of the week. Silver is sitting at $121. January had been the best month for silver in decades. 65% gains in just 30 days. Everyone was bullish. Analysts were calling for $200, even $300. People were saying this was the greatest rally of our lifetime. Social media was euphoric. Everyone thought they had bought the dip at the right time. Everyone was getting rich. And then 9:30 a.m. hits. New York opens. Within seconds, a tsunami of sell orders floods the market. And these were not retail traders taking some profits. This was institutional size, massive blocks, millions of ounces being dumped simultaneously. The kind of coordinated selling that just does not happen by accident. Silver drops from 121 to 115, then to 110. Then it breaks below 100. That psychological level that everyone said would hold forever. The support that was supposed to be concrete. It was gone. Blown through in just minutes. But it didn't stop there. 95, 90, 85, 80. Stop losses were triggering everywhere. Margin calls were flooding inboxes across the country. Traders were being liquidated whether they wanted to sell or not. The system was selling for them. By close, silver was at $75. Gold was at $4,700. 6 hours, 37%. Hundreds of billions in value just erased. I watched it happen in real time. I watched fortunes disappear. I watched years of gains turn to dust in a matter of hours. And the question everyone is asking tonight is simple. What happened? What changed? The answer they gave you was nothing. Just a correction, they said. Markets got ahead of themselves. Healthy pullback. That's the cover story. Here's what actually happened. Watch the 60 days before Friday. Pay close attention to the dates because this is where the pattern emerges. December 12th, silver is surging and making headlines everywhere. The CME Group, the exchange that controls silver futures trading, raises margin requirements by 10%. It barely makes the news. December 29th, silver keeps climbing, hasn't slowed down at all. CME raises margins again, and this time it's aggressive. A 25% jump overnight with no warning. December 30th, the very next day, less than 24 hours later, they raise margins again. 2 hikes in 2 days. That almost never happens. January 28th, just 3 days before the crash. They do it again. This time they change the entire system, moving from fixed dollar amounts to percentage-based margins. 9% becomes 11%. For riskier accounts, it goes up to 12.1%. 4 margin hikes in 6 weeks. 80% total increase. Now here's what that actually means for traders, and this is critical to understand. Margin is the cash you need in your account to hold a futures position. It's your collateral. When you buy silver futures, you don't pay the full price up front. You put up a fraction of it. That's how leverage works. But when they raise margin requirements, every trader holding a position suddenly needs more cash. Not next week, not when it's convenient. Immediately, today, right now. And if you cannot deposit that extra money within hours, your position gets liquidated. Sold. No negotiation. No appeal. You're just out. Picture your landlord calling you right now and telling you your rent just went up 80%, and you have until tonight to pay, or you're getting evicted. That is essentially the call that went out to every silver trader in America at the same time. Your account needs 80% more cash. Deposit it in the next few hours, or we are selling you out. Most people do not have that kind of money just sitting around. They can't pay. So they get liquidated, forced to sell whether they want to or not. And when thousands of leveraged traders are forced to sell at the exact same time, What do you think happens to the price? It doesn't just decline, it collapses. It crashes 37% in a single day. This was not the market finding fair value. This was not a bubble popping naturally. This was not profit taking. This was the CME pulling a trigger. And here's what should really disturb you. They have pulled this exact trigger before. 1980, silver runs from $6 all the way to $50, an 800% gain in just a few months. Regular people are making fortunes. The system is under pressure. What was the response? The CME creates something called Silver Rule 7, which essentially bans leverage buying overnight. You want silver? Fine. But you have to pay 100% cash, no margin allowed. And that same month, the Fed chairman raises interest rates from 11% to 20% in a single move. The result? Silver crashes from $50 all the way down to 10, 80% destruction. It was over. 2011, silver runs from $8 to $50, a 600% gain. Retail traders are piling in everywhere. Banks with massive short positions are getting absolutely crushed. What was the response? The CME raises margin requirements 5 times in 9 days. 5 times in just 9 days. That's an 84% increase. The result? Silver crashes from 50 to 26, 50% gone in a matter of weeks. And it took 13 years for silver to recover from that crash. Now here we are in 2026. Silver runs from 26 to 121, a 450% gain, the biggest rally in modern history. What was the response? CME raises margins 4 times in 6 weeks. The result? Silver crashes 37% in a single day, the fastest destruction of the three. 1980, 2011, 2026. 3 times in 50 years. Same setup, same tool, same destruction. Every single time silver threatens to break out. Every single time regular people start accumulating real wealth in precious metals. Every single time gold and silver start exposing the weakness of the paper system. The exact same playbook executes. This is not coincidence. This is not risk management. This is a pattern, a system, something they deploy whenever silver gets too powerful. Once is an accident. Twice is a coincidence. 3 times is a pattern. So the question that really matters is why? Why does someone care this much about crushing silver? And the answer has nothing to do with silver itself. It has everything to do with what silver represents, what it threatens, what it exposes. This is about the dollar. The United States has one superpower that no other nation on earth possesses: the world reserve currency. Every country needs dollars to buy oil, to trade internationally, to hold as reserves in their central banks. This is why America can print trillions and still survive. This is why they can run 30 trillion in debt and just keep spending. Because the world has no choice. Everyone needs dollars. Everyone has to participate in the American financial system, whether they like it or not. But something is changing, and it's changing fast. Central banks around the world bought 800 tons of gold last year. Not dollars, not treasury bonds, physical gold, actual metal they can hold in their vaults. In January alone, central banks sold $48 billion worth of U.S. treasuries. $48 billion in just 1 month. The dollar's share of global reserves just dropped to 58%. That's the lowest it has been since 1995. 30 years of decline, and now it's accelerating. But here's the number that should really terrify Washington. For the first time in modern history, gold now represents a larger share of central bank reserves than U.S. Treasury bonds. Central banks around the world now trust a metal more than they trust America's promise to pay. That is not a small shift. That is the foundation cracking. And who is leading this shift? China, Russia, India, Brazil, South Africa, the BRICS nations. They are building payment systems that completely bypass the dollar. They are settling trade in their own currencies. They're hoarding gold like their survival depends on it. Because it does. Now watch what else China is doing. China controls 60 to 70% of global silver refining, not mining, refining. They are the gatekeeper. Silver gets mined in Peru, in Mexico, in Australia, but it all gets processed in China. Without Chinese refineries, the entire global silver supply chain breaks down. But silver is just the beginning. China processes 90% of the world's rare earth elements. The materials in your phone, your laptop, your electric car, your missiles. 90% of it goes through China. They control 98% of gallium refining. Gallium is essential for semiconductors. They control 80% of cobalt processing. That goes into every lithium battery, every electric vehicle. They control 60% of lithium refining. The entire green energy revolution depends on lithium. The modern economy runs through Chinese processing facilities. Every piece of technology you use, every military system your country depends on. And on January 1st of this year, China classified silver as a strategic national security resource. They put export controls on it, same category as military materials. Two superpowers with two completely different visions for the future. China wants a world where physical resources matter, where metals have real value, where the nation controlling the supply chains holds the power. They spent 30 years building exactly that position, and now they are using it. America wants the opposite. America needs metals to stay cheap. They need gold to stay quiet. They need your wealth parked in dollars and treasury bonds and assets they can monitor and control. Because if silver goes to $500, what does that say about the dollar? If gold hits 10,000, what message does that send to the world? It says the paper has failed. It says 50 years of money printing has finally caught up. It says the game is over. That message cannot be allowed to spread, so they crush silver. Same way they did it in 1980. Same way they did it in 2011. Margin hikes, forced liquidation, price destruction. Meanwhile, China keeps buying the physical metal. They keep draining the vaults. They keep accumulating while the West panics and sells. This is not market management. This is financial warfare between East and West, paper versus metal, dollar versus commodities. And on Friday, you watched a battle in that war play out in real time. The dollar itself tells the same story. The dollar index had been falling for months, going from 110 all the way down to 95.55, a 4-year low, the weakest dollar since 2022. And when the dollar falls, gold and silver rise. The reason is simple. Metals are priced in dollars globally. When the dollar weakens, it takes more dollars to buy the same ounce of gold or silver. Plus, a falling dollar signals that people are losing faith in paper money, so they run to hard assets. That's why dollar weakness has always been fuel for precious metals. But something critical happened at 95. Right at that 4-year low, the dollar stopped falling. It found a bottom and started to reverse. It's now climbing back up, and metals crashed at that exact same moment. You think that's a coincidence? The dollar finds its bottom, starts reversing, and silver loses 37% on the very same day. The margin hikes created the forced selling. The forced selling crashed the price, and the dollar reversal gave everyone a convenient cover story. Oh look, metals were just overbought. The dollar's recovering now. Everything is fine. This was coordination, the system defending itself on multiple fronts at the same time. Now look at what is happening in the physical silver market, because this is where the entire narrative falls apart. Before Friday's crash, when silver was still trading at 121, mints around the world were already struggling to keep up with demand. Perth Mint in Australia had suspended wholesale orders because the backlog was too large. They simply could not fill the demand. The US Mint had halted Silver Eagle sales. Dealers were defaulting on deliveries. The price was at $121, and you still could not buy physical silver easily. Now the price is $75. Try buying an ounce today. Call your dealer. Check the online retailers. See what kind of premium they are charging over the spot price. See if they even have any inventory at all. The paper price says $75, but the physical market is telling a completely different story. Because paper silver and physical silver are not the same thing. Friday proved that beyond any doubt. Paper can be created with a keystroke. Paper can be crushed with margin hikes. Paper can be manipulated anytime they choose. They control the exchanges. They control the rules. They control the entire game. But physical silver cannot be printed. It cannot be margin called. It exists in the real world, completely independent of their control. When you hold physical silver in your hand, nobody can margin call it away from you. Nobody can change the rules overnight and force you to sell. It's yours. Two markets. Two prices. Two realities that are diverging more and more every single day. While America was panic selling on Friday, while traders were getting liquidated left and right, while the paper price was crashing 37%, China was buying. Shanghai vaults drained 27 tons of silver in a single day last week. Not sold on the market, removed from the vault. Physical delivery to buyers who wanted the actual metal in their hands. This has been happening for months now. While Western investors trade paper contracts back and forth, Chinese buyers keep taking physical delivery. The vaults keep draining. The metal keeps moving east. America dumps paper contracts. China takes delivery of actual metal. America crashes the price. China says thank you for the discount. One side is trading promises and IOUs on computer screens. The other side is loading trucks with actual bars of silver. Which side do you think really understands what silver is worth? Which side is playing the long game here? The fundamentals did not change on Friday. Not one bit. Silver has been in a supply deficit for 5 consecutive years now. Every single year since 2021, more silver has been consumed than mined. The cumulative deficit is over 800 million ounces. That is nearly a full year of global mine production that simply does not exist. Industrial demand is exploding. Solar panels, electric vehicles, electronics, AI data centers, military systems. They all need silver, and that demand grows every single year. It's accelerating. Meanwhile, supply cannot keep up. There have been no major new silver discoveries in years. Ore grades are declining at existing mines. It takes a decade to bring a new mine online, even if you find silver today. Production costs keep rising. It's getting harder and more expensive to pull silver out of the ground. Demand rising, supply constrained, deficit growing. None of that changed because of one crash. The deficit is still there. The demand is still growing. The supply is still constrained. The fundamentals did not blink. What changed on Friday is a paper price, a number on a screen, a number that is controlled by futures contracts and margin requirements. Paper prices can be manipulated. Physical supply and demand cannot. After the 1980 crash, silver eventually recovered. After 2011, silver eventually recovered. Both times it went on to make new highs. They can suppress prices. They have the tools to do it, but they cannot do it forever. Eventually, physical reality wins out. It always does. You simply cannot fake supply and demand forever. The question is timing, and nobody knows that answer. Not me, not anyone. Here's what I know for certain. The CME raised margins 4 times in 6 weeks, and silver crashed 37% in the final week of that sequence. This exact same pattern has played out twice before in the last 50 years. Both times, silver eventually recovered. China controls most of the world's silver refining, and they just implemented export controls on it. Meanwhile, America crashed the paper price. Central banks around the world are selling U.S. treasuries and buying gold at the fastest pace we have seen in decades. The physical market was already broken before Friday. Now it's even worse. The gap between paper prices and physical availability is wider than I have ever seen it. What I do not know is whether 75 is the bottom. Could silver go down to 50? Yes, it absolutely could. Could it bounce back to 100 next month? That's also possible. Nobody knows for sure. And anyone claiming certainty right now is either lying to you or trying to sell you something. But here's what stays with me. If silver truly does not matter, why do they keep doing this? Why run the exact same playbook 3 times in 50 years? Why coordinate margin hikes right before crashes? Why does the CME care so much about the price of a metal? They say it's risk management. They say it's for market stability. They say they are protecting traders. But look at what happened on Friday. Traders got absolutely destroyed. Billions in losses. Accounts completely wiped out. Years of gains gone in hours. They are not protecting traders. They are protecting something else entirely. The dollar, the system, the narrative that paper money actually works, the fact that they keep doing this, the fact that 3 times in 50 years they have crushed silver whenever it started to run, the fact that they simply cannot let it trade freely. That tells you exactly what silver threatens and exactly what they fear. In 1980, they told you they crushed silver to stop manipulation. In 2011, they told you they raised margins to ensure market stability. In 2026, they're going to tell you this was just a healthy correction, normal market behavior. Nothing to see here. But you can see the pattern now. The margin hikes, the coordination, 1980, 2011. Now, China accumulating while America dumps. Central banks choosing gold over treasury bonds. You know what they do not want you to know? The paper price says silver is $75, but paper is just a claim, a promise, an IOU that can be manipulated, margin hiked, or defaulted on at any moment. Metal is real. It exists in the physical world. It cannot be printed by a central bank. It cannot be hacked. It cannot be frozen by any government. It cannot be margin called out of your possession. They can crash the paper price. They cannot crash the metal itself. They can liquidate futures contracts. They cannot liquidate physical silver sitting in your safe. They can manipulate markets, but they cannot manipulate reality forever. They keep printing trillions. Silver cannot be printed. One of those has to win in the end. And history has already voted on which one. A lot of voices are going to tell you to sell now. Cut your losses. Get out while you still can. And maybe they are right in the short term. Silver could definitely go lower from here. I genuinely do not know what happens next. But ask yourself this question. If silver was truly worthless, if gold was just some outdated relic, if precious metals were genuinely irrelevant in the modern financial system, why would they need to do all this? Why raise margins 4 times in 6 weeks? Why run the exact same playbook across 50 years? Why would China be stockpiling physical metal while America crashes the paper price? You do not fight this hard against something that does not matter. The intensity of the attack tells you the value of the target. Remember that when you're making your decisions. Friday was not a crash, it was a message, a reminder of who controls the paper markets, a demonstration of power, but it was also something else. It was confirmation. Confirmation that silver still matters, that precious metals still threaten the system, that after 50 years of fiat money and unlimited printing, they still have not figured out how to make gold and silver irrelevant. And honestly, that might be the most bullish signal of all. They called it a crash. I call it a crime scene. They called it volatility. I call it the same playbook running for the third time. They called it risk management. I call it the system telling you exactly what it fears. 37% in a single day. No news, no explanation. Now you know why. The margin hikes, the playbook from 80 and 2011, China versus America, paper versus metal, a financial war that nobody talks about. The data is public, the dates are documented. The pattern is there for anyone willing to look. What you do with this information is entirely up to you.